And if one person says to me no, that means for me next opportunity. Not no, it's next opportunity. And so I'm going to call the next lender, say, okay, I got this scenario. What can you do for me?
Welcome back to the Falls Homefront, where Wichita Falls leads in North Texas real estate, business, and life. I'm Tim Lockhart, and today we're talking about one of the most important parts of the home buying process, the financing. Whether you're a first-time buyer, a military family relocating to Shepherd Air Force Base, self-employed, building a custom home, or investing in rental property, understanding your financing options can make all the difference. Today's guest is someone that I know pretty well, my wife, Gaby Lockhart, and I get to hear her solve mortgage challenges every day, and I thought it would be valuable to bring some of those insights to all of you. Gaby is a senior residential mortgage loan originator and branch manager with Barrett Financial Group here in Wichita Falls. She specializes in helping buyers find creative financing solutions, especially when traditional lenders have said no. Gaby, welcome to the Falls Homefront.
Hi, thank you so much for having me today. I appreciate it.
Let's start with your story because I think it helps explain why you're so passionate about helping people. So can you tell us, how did you get into the mortgage industry?
Actually, we were planning on building our investment portfolios and stuff with owner financing. And I learned that, you have to be a licensed mortgage loan originator. And so I got my license. And then I found out that with my license, I have to be approved by somebody who is accepting my license, also accepting to do owner financing. So that didn't work out so well. So I became a loan officer. I worked with Guild Mortgage, and Guild Mortgage was very good for me, had helped me a lot. And so my whole process, when I was thinking back, when I went through all the study, and I think that's one of the important parts that Tim wants me to point out, was I studied for my origination exam and going through all the guidelines. And then I noticed that when we got our loans, there was a lot of mistakes that happened. When we bought our first house in 2002, I was not involved. Okay, to the United States. I came from Germany to Iceland and then got to the United States. That was a big transition, believe me. And we bought our first house and we were excited on the house. And I think it was a Monday evening when they told us, yeah, tomorrow morning you're going to close at 9 o'clock and that's how much money you're going to bring to closing. And it was 5 o'clock and, the banks close at 5. So Tim had to figure out how he's going to get a cashier's check in the morning. So he said, okay, I'm going to be at the bank at 9 o'clock and we're going to close at 9:30. That was the first thing. So the loan officer did not communicate with us at all. And then my traumatic part came in basically because I got to the closing table and they looked at me like, you cannot sign any documents. You are not able to buy a house. You're not going to be on the loan. I just got you cannot do this. And I had to sign paperwork. And I was devastated in that moment. But Tim said, don't worry about it. We're going to fix that afterwards. And he promised, he really did. And I really appreciate him for doing that. It was incredible. And so we got to our house, but it was traumatic, that process of going to the closing table and going and meeting with the loan officer and stuff. I still see myself sitting at that table and looking at Tim, and he was like, it's going to be okay. I make it right. And I really, really appreciate that a whole lot at that moment. But my goal was, when I became a loan officer, this will not happen to any of my clients. I will communicate and I will tell them what's going on. I will tell them what the closing cost is going to be and ahead of time and everything else. So I learned a lot from that experience, believe me. And my biggest goal is that my clients are never in the dark, and I will do my very best to get everything resolved and make it happen. Was there anything else that I forgot?
No, that's good. Yeah. The second home that we bought wasn't much easier, and I was actually deployed, so you had to do that with power of attorney, and you had to sign both names.
Oh, yeah.
That wasn't fun. I know I wasn't there to experience, but
Yeah.
I know it wasn't fun.
Yeah, that was another decision that I had to make. Basically, he was deployed in Saudi Arabia, I think, at that time, and I had to sign all the documents in the power of attorney. It took me a long time for me to understand what I was signing and everything else. Yeah. But Keller Williams' agent was really there and was helping me through the whole thing. I have to put a big plug in for Keller Williams.
Yes, through the years we did have some good Keller Williams agents, which was one of the reasons why I chose to
Really love
work for
them.
this company after we retired. So,
Mhm.
when working with buyers, because you are a mortgage broker with Barrett Financial, you have a lot of options. And one thing that I always admired
Yes.
about you is that you don't stop at the first no. Lots of banks and traditional lenders, they sometimes have a one size fits all approach, but you seem to enjoy figuring out how to make deals work.
That is absolutely true. I love to put the loans together. I feel like it's more like a puzzle piece that I'm putting together, and depends how big or how small or how colorful it's going to be. But I just love putting the loan together. I specialize on making unique situations into a beautiful loan, into a house that the buyer can buy. I just really enjoy doing that. And if one person says to me no, that means for me next opportunity, not no, it's next opportunity. And so I'm going to call the next lender, say, okay, I got this scenario. What can you do for me? And I have a personal relationship with my account executives. I do fly again in November to Phoenix just to meet some more account executives, just to get a good feeling on it. Because if you can trust your account executive, then you know that you're in good hands. And that's really important also.
Yes, that's great. Lots of people, especially consumers that don't buy a lot of houses, they may think that they're, just, one FHA loan or one VA loan, but there's really a whole lot of options.
There's a lot of options because every lender, we call them, they have a different appetite. So some of the lenders, they may like a lower credit score. They give better interest rates or better opportunities for the buyer with credit score in interest rates. And then you have some, they don't mind if it's not a perfect loan. They have no problem with it either. And we may need one or more two conditions on it, which is not a problem. So we have so many different investors. I know I have 160 opportunities to really work with the loan opportunities, but that makes my job unique because I can talk to them and see what they like and what they don't like. And so I don't have to say no. And I don't like that word. It's next opportunity to get you into a house.
All right, that's great. Yeah, so one of the things that we talk about on this podcast with several guests is why people choose to build their lives and their businesses here. And we've chosen to raise our family and to build our careers here in Wichita Falls. Um, what do you love most about this community?
I love this community because there's so many opportunities to go and visit. We have Harder in Hell coming up. We have so many unique things here in Wichita Falls. Every month there's another opportunity to do things. We have the symphony. We have, I don't know, there's so much things going on in this neighborhood here. You really don't get bored. I mean, if you really want to do something different, we are 2 hours from Dallas, we are 2 hours from Oklahoma City, but really it's not necessary. Wichita Falls has a great community. We love each other. We communicate with each other. We work together here in Wichita Falls. If there's a problem, I can call somebody and say, hey, what can I do? How can I fix that situation? And you get answers that you don't get in the big cities. Does that make sense?
Yes, it does. Yeah, so there's so many military families that we work with that often know very little about Wichita Falls before they arrive. What do you
Mm-hmm.
enjoy about helping them not only buy a house, but also to truly feel welcome here?
You know, when you find out about those families when they move to Wichita Falls, and you see the interest that they have. Like if they want to go, if they have small kids, you can tell them about the butterfly homes. You can tell them about little things, and they can find it, and they can get. It's just Wichita Falls is very, very welcoming to families and to businesses. So that makes it really unique. So there's so many things here in town that you can connect with people, and it makes it easy because it's a small city with big hearts, I would say.
One thing that is interesting is that we come to the same transaction from different perspectives. So I'm helping
Hmm.
clients find the right home, and you're helping them figure out how to finance it. One question we
Yes.
hear a lot is, I've talked to my bank and they told me I don't qualify. When someone says that to you, what's the first thing you start looking at?
I tell them, let's go and look at all the numbers. Let's look at the portfolio. Let's look at your loan application. Fill out an application. Let me review it and let me make a decision and see what I can do for you. Because usually, if you don't fit into a box with banks, credit unions, or other lenders, because they don't have the opportunity to make the box bigger, and I'm an out of box lender. I'm not really I like the opportunity and the uniqueness on this part. So most of the time people may are self-employed. And so if they're self-employed, then they don't have the opportunity to work with those credit unions because they go strict by tax returns and tax returns. When I see somebody who's writing off their business expenses, makes me happy. Why not? Because they're saving money and they're good in business. So, we have different options. We can go bank statement loans. We can go profit and loss statements. We have so many other opportunity or stated income. We have so much stuff going on that we can utilize that other lenders cannot utilize because we have really a whole bunch of investors that will offer those opportunities. Sometimes the lower credit score maybe not go through. Maybe they get with the automated underwriting system a refer eligibility. Other lenders cannot work with it. We can work with it because we do have preferred lenders who love those loans. So only because somebody maybe made a mistake by seeing the calculation or seeing not the right opportunity is not does not mean that you cannot buy a house. Does that make That's what I think. It's most of the problem that I see that people get declined is that the loan officer does not know how to work the loans.
That's great. Yeah. And since we're in a military community, let's talk a little bit about VA loans. One myth
Mhm.
that I hear all the time is, I've already used my VA loan, so I can't use it again. Can you clear that up?
Oh yeah, absolutely. So if you have a VA loan right now, you can buy more houses actually with the VA loan. Like military families, they move to different locations and they may want to keep one as a rental. That's not a problem. So the loan limit for Texas on the VA loans is 832,000. And so it's not a problem to qualify for more than one, two, or three VA loans. It's absolutely a possibility. It's a lifetime. So if you're a veteran, you can buy VA houses and it's not a problem at all. We can also, if you had it in the past and you sold that property, we can restore your full eligibility on it also. There's so many things that you can do on it. We calculate everything out. So just let us know. Hey, I'm a veteran. I used it before. We're going to get your certification of eligibility from the VA. We're going to look at it. We're going to calculate it out, and then you're going to buy the next house.
And there's been a lot of changes with the VA financing in the last couple of years. So it doesn't take any longer to close a VA loan than it does an FHA or conventional loan now, right?
No, actually, we closed them faster. I mean, I think I closed one VA loan in 11 days because the VAs are very easy to go through. They're actually very easy loans because you don't have so much a debt to income ratio because it's calculated completely different. And so we had actually a debt to income ratio loan that got approved eligibility on 73% debt to income ratio. So yeah, but that's a loan officer who needs to know, hey, we can we can still run the numbers, we can still do the loan.
Yes. And the appraisals are coming in quicker also. There's what, a 10-day requirement for the
So the
appraisals to come back?
Yeah, the appraisal has 10 days to get back to us, 10 business days. So when we order the appraisal right away, when we get into contract, I know sometimes realtors don't like that, but if the buyer needs to close really fast on the loan, then that might be something that we do. But I usually discuss that with my buyers. That, are you determined you want to buy this house? Are you okay with it? And so we do order it. If there's an issue that we would cancel the contract, then we're going to keep an eye on the appraisal, or we order the appraisal and put it on hold. But at least the order is placed, and it's placed in, it's set in stone, and that's sometimes what you can do to expedite everything else.
All right, that's good. There is another group of buyers that you mentioned already, and that is self-employed. So traditional underwriters can make it difficult for entrepreneurs to qualify for a loan. Why is that?
Well, because like I said, when you have a tax returns and you look at the tax returns, I mean, I just looked at one the other day, and they came to me and they said, well, somebody else, another lender, basically told them they would have to get either an arm, or they have to sell the house and stuff like that. And I looked through the credit report, and I looked through the contract, and then I had asked some questions, and I was able to remove some of the liabilities because they're paid out of the business account. So, I mean, you have to know when you can remove and when you cannot remove it. And so we do know it. And if you don't have questions, we can send it into an underwriter, say, hey, can you review my file here quick? This is what I would like to do, and this is how I want to handle that. And then an underwriter is getting back with me and tells me, well, look at this item and look at this item too. You can add this one in, and you have to subtract that one. But that's how we can do it. And if that doesn't work, then we can go with a bank statement loan, and we get 12 or 24 months bank statements. And usually there's a solution. So, but self-employed, it's not a problem. Like I said, we have stated income loans. We have banks, or we have lenders on our portfolio that will they're just specializing for those particular niche programs, just bank statement or just stated income, and that's their specialty.
That's good. So I was going to ask you about the bank statement loans. Could you briefly describe the difference between a conventional mortgage and a bank statement loan?
Absolutely. So we're going to take the 12 months bank statements, and then we send it to underwriting because they put it all in. They have their own formulas on how they read it. And then different guidelines, different banks, different lenders have the criteria. They either take 50% of what you're depositing in your bank account and then give that as income. So let's say you have $100,000 income coming in 12 months, then you can qualify maybe for 50. Some of them, they go up to 75, some go up to 90. So we just have to find the right company that will do the loan for what you want to buy. The other thing is the interest rates might be a little bit higher, not that much, maybe 0.5%, but you don't have any mortgage insurance on it. And the bank statements, you put 10% down. Depending on credit score, if your credit score is a little bit lower, then you may have to put 20% down. But like I said, there's no mortgage insurance, and the loans go quickly through. I mean, I closed one in 2 weeks with appraisal.
Yes.
That was amazing.
Yeah,
but I got it done.
Yeah, so let's switch the focus a little bit to investors. There's a lot of people that are looking to build a rental portfolio, maybe get their second house and rent out the one that they were living in, different things like that. So one of the financing tools that is becoming more common lately is a DSCR loan, debt service coverage ratio loan.
Right.
Can you explain to us what that is?
The rental income coming for that house. You're gonna do an easy math. I like easy math. So basically, if you're receiving the rent of $1,250 a month, and your principal, interest, taxes, and insurance is $1,000, then you have a debt to DSCR ratio of 1.25. That's an easy way to calculate it. If you want a calculator, you can contact me and we'll get you a calculator over that you can see if this is a good deal or not so good deal. So we do have something like that that we are just working on right now, because it helps our investors to see if they're going to cash flow or not cash flow. One big tip I'm going to give you right now, if you're planning on buying a house and keep it as a rental and you want to do a DSCR loan, talk to me ahead of time, because there are certain things that we need to pay attention to. The loan amount, the area, because if you want to buy a rural, then we have to find a lender that likes the rural neighborhoods. So DSCR is a little bit difficult. Not really. You just have to do the job ahead of time and make it easier in the long run.
Okay, that's great. Are there any common mistakes investors make that you would like to caution people about?
Yeah, there's a few cautions that I would say. Basically, if you buy like multi-family homes, yeah, make sure it's not turning into, like if you buy a duplex, a fourplex, and it's two houses next to each other, that they are going to turn into a fourplex. That can be causing an issue. That could be a problem on that one. Or if you buy something that's too high, that you don't cash flow on it. I do have one lender who does not go by the DSCR ratio, but then you have to also expect that your rate is going to be really high too, and then you really don't cash flow it anymore. So you have to be really making sure that you cash flow in a good way, in a good calculation. That's why I always say, talk to us first and see what we think about it with the numbers. Get an estimated insurance quote too, because every house has their own insurance. And we just, they may know more about the house than you and I do. But if your insurance quote is really high, then we need to keep that in mind, that you are, that your debt service coverage ratio is going to be in a good shape. Also the taxes, and so there's a lot of things that you need to calculate in the preparation before you buy a house.
That's great. Thank you. Yeah, so the market has changed quite a bit over the last few years. The interest rates, have changed. Inventory has changed. Buyers' expectation has been changing. So when clients ask, should I wait or should I buy now? How do you answer that?
I personally recommend that you are buying now, because, I mean, the best time to buy is today. Or 20 years ago, but you're not 20. It's 20 years ago. It's a long time ago. It's gone. So the best thing is, if you want to buy a house, then make a decision that you want to buy a house now. You're gonna love the house. You're gonna date the rate, and we can always fix the rate later. So as long as, that's my point, is I think it's always the best time today to buy, and I would not wait.
What strategies are helping buyers succeed in today's market?
If you have a down payment, it's a big help, because if you have your down payment ready to go, you're going to save a lot of money on the interest rate. You're being proactive. You don't have to, it's less hassle. Let me say it this way. If your credit score, if it's in the 600s, we're good to go. If it's in the higher 500s, we are good to go. Even down to 500, we might be able to swing that also with some extra paperwork. But the best thing is really to talk to us. If you go like, hey, I want to buy a house in about 6 months, then it's a good time to start talking to us mortgage brokers and say, hey, this is what I want to do. Can you give me some tips and tricks, what I need to do in order to get better, or what else do I need to do in order to get a better rate, or anything else. So I would recommend, if you're thinking to buy in the next 6 months, start talking to us and give us opportunity to educate you. And if there's something on your credit, we can point it out, say, hey, fix this little thing, and you're going to spark up in a heartbeat, and we can get you much better rate, much better opportunities, and save up your money, or have somebody who can help you out with gift letters. But the down payment assistance programs, They sound really good, but nothing is free, honestly, because there are stipulations on it. I have one lender that they do a 3.5% down payment, and after 6 payments, it's forgiven. Now you're going to say, but that's good. It's awesome, right? Yeah, but the interest rate is also going to be 0.5% higher. And so you have to pay attention to all the numbers. And that could mean that you're paying maybe $100 a month more than if you would have the 3.5% down. So what is more important, the monthly payment for the next, let's say, I don't say 30 years, but for the next 10 years, because we can always refinance. But what is the best scenario is have your down payment to get started. Or talk to us how we can build you the down payment. So there's a lot of ways we can help you with.
Yeah, so, where do you see mortgage lending headed over the next several years? Do you think we'll continue to see more alternative loan programs?
Yes, absolutely. They're coming in every week. We're gonna get another opportunity, another loan program that makes it easier for the buyers to qualify. Absolutely. I mean, I've been doing it now for over 13 years and it has been mind-boggling. I guess that's how you say that. I'm going like, seriously, that's how you're going to approve a loan? And they said, yeah, not a big deal. And so we tried out and it does work. So that's why I like to have my personal relationship with my account executive so I can trust them that they really will come through on the loan to make the loan go through.
Okay. So, if there is one thing that you would like our listeners to remember from today's conversation, what would that be?
Ask a lot of questions to the loan officer. Ask them if they can really answer your question or if they're just going to say, well, this is the best option. And you go like, why is the other option not better? Ask questions. Don't just say, this is how it needs to be. Ask the question, do you not have any other options? Because when I started off, I was scared of conventional loans or self-employed, and I just didn't want to do them. I was scared. Now I'm going like, let's bring it on. Let's find a solution to it because I'm confident that I can help you with what I can do. If I don't find an answer, I will let you know or I find out what we can do in a month or two. But yes, ask a lot of questions and don't hesitate on asking those questions. And if the loan officer said, well, I don't want to answer your question or I don't have any answers and I cannot get you any answers, that means you need to find another one. That's my personal advice. Don't just go with one scenario. Ask for multiple scenarios. Challenge it because you are making an investment, a huge investment that you're going to pay for a while. And I think doing the job diligently by asking a lot of questions, it's important. And if they're not willing to answer, give me a call. I can do loans all over the United States, so it's not a problem. I can refer you out and I can keep an eye on it and watch like a hawk.
Okay, Gaby, thank you for taking the time to share your expertise today. One thing I appreciate is that every buyer's financial story is different, and the right lender doesn't
Yes.
just look at the numbers. They take time to understand the person, explore available options, and help build a plan that fits their goals. So if somebody is
You
thinking
know,
about buying the first home, building a custom home, or refinancing or investing in real estate, or simply wants to understand what's possible, what's the best way for them to get in touch with you?
you can call me on the 940-704-7065. That's my cell phone number. And you can just reach out to me, send me a text, call me, and then I get you the next step, what you need to do.
Right. And what is the website?
GabyLockhart.com. Very simple. Just let my name, GabyLockhart.com, fill out an application, and you can contact me through my website also.
Okay. Thank you. And for everyone listening, here's today's takeaway. Don't assume that one no means homeownership isn't possible. Sometimes the
Correct.
difference is working with someone who's willing to look beyond the obvious and find the financing solution that fits your situation. If you found today's conversation helpful, share it with a military family, first-time buyer, entrepreneur, or investor, or anyone who's thinking about making a move. Thanks for tuning in to the Falls Homefront, where we highlight the people, expertise, and opportunities that make Wichita Falls a great place to live, work, and invest and build the future. So we'll see you on the next episode.
Awesome. Thank you.
Appreciate you tuning in. Want more insider tips on buying, selling, and investing in Wichita Falls and North Texas? Subscribe now and keep watching. Your next move starts here.